Everyone. Today is 7th of August. It's Friday and the market is about to close. Just a quick update with regards to my trades. As you can clearly see, I've got three short positions at the moment. And as I told you before, I walk my talk, everything gets recorded and documented. And in due course, maybe you'll be able to figure it out why I trade the way I trade, and I will try to explain in more details later on today. Okay, so at the moment I've got three, um, uh, well, not three in total, six positions going short. These ones here, they will be hitting 100 pips each. I mean, these ones, they will close automatically. I'm just waiting for the market. I mean, as you can see, this is Fibonacci. As I told you before, I don't really use Fibonacci in order to trade. So I don't use it as a setup. I just use it to more or less figure out where the price might end up. So at the moment, price tried to break through this level of 31.70 more or less. Try twice. Okay, at the moment it's somewhere here. Okay, in the range of 130. As you know, we don't really care where the price ends up in the long term, as long as we're gonna hit our home runs. Let me explain to you something very important. Trading should be treated as or like running a business. What is important, in order for you to run a business successfully, you need initial capital. So this is what's happening here. I've got, okay, look, you know, look, I've got equity 49,000, balance is 50,000. So basically 1,000 is at the moment is a floating loss. But to me, it is a it's a floating capital, which I need to use in order to hit my profits, to hit my targets. That is important. Another thing is I do not advocate for silly stop losses. They don't work. Usually how it starts, you buy a book, you learn about trading, and all the emphasis is about run your winners, cut your losses. Not that easy, especially when it comes to run your winners. I mean, if you follow the link on my YouTube channel to my website, there I put up my live trades. Of course, I cover my account details due to security reasons. But there you can see that their last trade, successful trade, was about in the range of 200 pips. So it's not about, it's like, it's not about running your winners. It's what the market allows you. Um, whatever market allows you to generate, this is how much you should generate. So at that time, market allowed me to generate 200. It's not that I put take profit as 200. No, it was a floating profit. Okay, and then I manually closed it in 200 plus pips category. Same thing will be happening with this setup for sure. Also, another thing is like there's a important thing is this is the mathematical explanation also. Like for example, let's say you start with £10,000 and after some time you're gonna lose £5,000. That's a loss of 50%. Now, in order for you to break even from 5,000 to get back to 100, you have to you need to make at least 100%, not at least, you need to make 100% in profit in order to break even, which makes your work twice as hard. So that's why, brokers, they don't really, when you visit their websites and they have these free webinars, they teach you nonsense. I mean, maybe some, they share some kind of intelligence, so to speak, but most of it, it's all complete nonsense. So don't waste your time on that, stop losses system at all. That being said, when you trade, I mean, I always tell I cannot provide or give financial advice. I'm not authorized or regulated by financial conduct authority. So whatever I do here, this is like my opinions, my judgments, my understanding of the market, and this is how I work. If someone is interested or would like to learn, please sign up for my course. I'm more than happy to share my wisdom. So that being said, of course, let's say if you've got 100, if you saved up, that's your life savings. That's just general understanding, know-how. You need to be, street smart. Let's say you saved up £100,000. Of course, you're not going to be using £100,000 to trade. From that, you should trade use at least maybe 10%, because if something goes wrong, you know that if you lose £10,000, that's not end of the world. Okay, it's not that you've lost all your savings on £100,000. So that is important to keep in mind. Another thing is, like, sometimes people say, oh, come learn to trade. It's like it's gonna be your full-time job. No, it's not. Um, it's like trading to be rich. Complete nonsense. Um, if you've got let's say, a deposit of £5,000, I tend to hit anywhere between. Again, you can go follow the link and you will see what I have generated on £5,000 at the moment so far. It's like 9%, but it's within like 12 months. So September is going to be 12 months. I'm aiming to hit 10%, so that's fine. A very conservative approach like the one I've got here. You see, nothing is happening. The market went against me by, let's see how much, how many pips. Just give me a second. Sorry. So let's figure it out from here. Somewhere like 460, 500 pips. Nothing happened. You see, look, I've got 3 short trades positions, and at the moment I have what I call floating capital, which I need to use in order to generate profits. And you will see it in due course, how the balance will increase and equity will follow. As I said before, I will try to hit anywhere between 50,500 or 51,000, anywhere between 1%, 0.5 up to 1%. We'll see. Whatever market allows me to generate. Okay, so another thing is, let's say if you've got £5,000, okay, and let's say you learn how to trade and you consistently, let's say, generate 6-7% per year. Okay, someone's going to tell you, okay, I generate 6-7% per month. Please don't get involved with this nonsense. It's like high reward always means high risk. That's it. End of it. Keep that in mind, please. Here we've got compounded yearly interest rate. So let's say you started with 5,000. So first year you would have generated, or you would generate £325. Following year, 346. I mean, what can you do with £325? Probably pay your yearly subscriptions, Sky box, or satellite or stuff like that. Not that much, yeah. So again, that looks promising. That looks good. 6.5%, easily achievable using a conservative approach to trading. And let me explain to you why there is a saying, money begets money. So let's say you've got £500,000, same annual interest rate, compounded. First year 32,500, following year 34,000. Okay, let's say no compounded, but let's say first year 32,500 and the second year 32,500. You can live off nicely on this sort of generated income. So that's why rich get richer, money begets money. Yeah. So on a small, that's what I'm saying. When someone says, okay, learn how to trade, you're gonna become rich. Depends also on your deposit. I mean, if you're quite well off financially, and you can afford to put aside 500,000, 1 million, 1.5 million pounds for investments, trading, etc., you can your income, they can generate comfortable sort of profits for you. And especially if you use if you reside in Britain, you can set up what do you call it, spread betting accounts, which are at the moment, of course, tax free. In the future they can change. Again, I don't provide any financial or tax advice. Get in touch with your so-called advisors, the financial advisor. They will explain to you how it works. So same here. This is what I said. That is important to know, that you should sort of learn how to trade and run it like your business. So for example, if you let's say if you want to set up your own restaurant and you're gonna go to bank, or you're gonna come up with your money, let's say you've got 50, like, I don't know, £100,000. It's not that you're gonna put it in your bank, in the bank account and forget about it. No, you have to use it in order to generate profit. Okay, this is what's called working capital. Same here. This £1,000 floating at the moment to loss. It's like if you start a restaurant from day one, or within the first 2 months, you're not going to generate any profit. So you have to invest in order for the capital to work. And after 3-4 months, you will be able to see that, okay, you're generating more than you have put in. Same here. At the moment we start, that's a balance of 50,000. We're using 1,000 in order to slowly, increase the balance. Equity will follow. Then we're going to close it, let's say 51,000, 51,500, and then we'll start the process all over again. As simple as that. And that's my saying. Simplicity is a sister of wisdom. Do not overcomplicate things. And another problem is, lots of traders, they're like gamblers. They're addicted to trading. They want to trade as many currency pairs as they can, and open as many positions as they, you know, they want, so to speak. You shouldn't do that. Look, starting from what do you call it? 15th of July, at the moment, up until now, I have had 3 open positions. Well, I've still got them running, but in due course, I'm just waiting. Either it's gonna go down. I will, register certain profits here and here. Then I'll wait. There is a possibility the market might continue going higher, like up, trending higher, trending up, and then I will buy, and then again I will sell, then buy, sell, and that's it. And I will hit my 52,000 equity, easy. As long as you've got patience, you will achieve your targets. And as I said before, don't overcomplicate things. Okay, that's it for today. Just a quick update, and I will catch up with you next week. Have a good one.